welcome to Big Deal. And we have the top team of Bank of America, Merill Lynch, with us right here in our studios. Thanks so much, Asit Bhatia and Raj Balakrishnan, for joining us on CNBC TV 18. Now, 2016 has come to pretty much an end. How has the year been, Asit, so far for your business?
The year has been pretty good for us, both on the investment banking and the corporate banking side. We've been involved in several large, transactions, both on the financing side as well as the capital raising side. Raj will talk a bit on the M&A side. As you know, we were involved in the two largest IPO deals, during the year. We were involved in the ICICI Pru and the PNB Housing Finance, deals, which were the two largest IPO deals. On the financing side, also, we've been involved in several transactions. I must say, a lot of transactions that have happened in India have essentially been on the refinancing side. We've involved in on the cross-border, bit of financing. A lot of them have been refinancing, but which is the nature of the beast in India today. So yeah, it's been a good year for us, no complaints, and we look forward to 2017.
So 2015 was better than or was not better than 2016. 2016 turned out to be better for your business, Raj. Is 2017 looking any better than this?
For 2017, our pipeline looks extremely strong. As a matter of fact, 2015 was also an extremely good year for us, much more than for the rest of the street. But our pipeline looks very, very strong. I think we've got a number of deals in the pipeline, both on the capital raising side and on the M&A side. Of course, you never know. Deals are never done till they're done. Yes. But we look forward to having a great year in 2017 as well.
How are you placed in terms of league table?
How are we placed in terms of league table? I think our strategy has been focusing on the largest and most relevant deals. So, for example, on the IPO side, we worked on the two largest transactions of the year, as Asit mentioned. Similarly, on the M&A side, we worked on some of the most transformational deals of the year, be it the Birla Group restructuring or the GVK Airport's sale of the Bangalore Airport stake to Fairfax. So I think that's been our focus. Our focus has been on quality rather than just volume league tables and adding value to clients.
All right. Now, Asit, of course, when you're in the banking sector, it's sacrilege not to talk about demonetization and its impact. Everybody is trying to work around things and trying to understand what will be the real impact. From your sense, from your view, how is the business going to pan out, and what could be the impact of demonetization?
So I think we'll have differing views on demonetization from different people. I personally am very positive about demonetization. Let's accept there is short-term pain. You do see the pain on the streets, but when you look at it at a high level, I think what's happened is you're essentially cleaning up the black economy. As a result of which, when you take out 86% of your currency through demonetization, I think you are going to expect some kind of a slowdown to happen. Hopefully, it's a short-term pain with a huge amount of long-term gain attached to it. And that's the way I see it. I think there is pain. Let's accept that there is pain in the short term, but I do actually see over the next couple of quarters, hopefully, and hopefully sooner, things will become normalized, and you'll see a growth trajectory coming back very rapidly. So I'm positive about demonetization.
All right, so a couple of quarters is what you're giving it, and a lot of people have said that, and we'll see post that. But Raj, how are you seeing some of your clients really behaving at this point? ECM is one of the strongest businesses for your company. So is there wait and watch on that one? Is the pipeline drying up, at least in the first half of 2017, by way of demonetization?
No, I don't think it's driven
because of market volatility.
I don't think it's driven by demonetization. It's driven by market volatility. But if you look at how markets have behaved over the last several years, markets have been volatile. Just think of 2016 itself. You saw the kind of volatility. I think most people have even forgotten the kind of volatility we saw in January and February 2016. So the fact is that these periods of volatility tend to be short-term. And what we tell our clients is to get their ducks in a row, keep things ready. and there are these windows that are available. And for good companies, they're always, all you need is a short window to be able to get your deal done. And I think that's the approach that we've taken over the last several years, and I think that's the advice we continue to give our clients today.
All right. So have you seen any new clients coming and showing enthusiasm to come to the ECM market since demonetization drive was announced?
I mean, the demonetization drive was announced 2 or 3 weeks, 3 weeks ago. I think if I look at my entire business development cycle, it's a much longer term cycle than that. So have any of the clients we were talking to put their plans on hold because of demonetization? Clearly no. Everyone is continuing to work towards what their goals were, and I've not seen a single client say, hey, demonetization has happened, so I'm not going to do my deal.
All right. So market volatility is something that you always keep a watch on, and you time your transactions, capital market transactions, according to the market conditions, and that's what probably we will see. But Asit, going forward to other many factors that are happening across the world, of course, Trump victory is one big thing. Interest rate cuts in India, while Fed rate hike may happen, divergent monetary policy conditions when we see in the US and in India. How is the corporate finance world going to look like now?
So if you look at India, since 2008, and look at the rest of the world, since the global financial crisis, India was one geography in which we continued to have a high interest rate, environment. If you looked at the 10-year, bond, which is the benchmark bond that we all look at, it's always remained the 8-9%, level for the longest, time. We've seen some kind of correction, a lower interest rate environment, only in the last, 12 to 18 months. So I think there is definitely a room for, interest rate cuts from an India perspective. On the other hand, you've seen the world, at the lowest interest rate cycle for the longest, period of time. And that is now getting normalized, in some form. So you are going to see a bit of, compression between where India is going and where the rest of the world is, is going. Has that stopped, clients from accessing, capital markets? The answer to that is no. We've been, as active as we were. Again, trades have been opportunistic, but we are at the forefront of that activity, and I do expect that to continue. As Raj pointed out, we will see volatility in the markets, and we've got to time ourselves to, in some form, perfection. So hopefully that will continue even in 2017.
So in specific US dollar bonds, now that most of the financial investors overseas are looking at, selling emerging markets while going long on the US market, dollar is strengthening. How do you see in particular, US dollar bonds as an avenue of fundraising for Indian companies?
I think that continues to remain pretty good. You must remember that we've come off a cycle in which you'd had a very low interest rate environment plus a very strong low credit spread, environment. And as I'm saying, it's going to get normalized in some form. The US markets offer the deepest, and the longest tenor, markets compared to any other market in the world. And that is not changing. So you will continue to find, good borrowers who have the ability to access those markets, continuing to tap those markets. And like I said, our pipeline, is good, and we're looking forward to a good 2017 to execute some of the trades that we are working on.
So even rupee bond market, Asit, because that's where only a few clients have managed to get in.
So you're talking about the masala bond market or the domestic rupee market?
Rupee.
The domestic rupee market, yes, has some amount of depth, but doesn't have the size that you could typically get done from the US, dollar bond market. So when you're looking at size, when you're looking at tenors, you're looking at depth, that's where you go. You go to the US markets.
All right. And Raj, how is the cross-pollination between your corporate banking, which is strong, and the IB team, where ECM gives a very strong hold to your business? So how is that cross-pollination really working out?
I think it's working extremely well. I think, Asit comes from the legacy bank side. I come from the legacy investment banking side. But we work together, and we work together on every client account. We work together with our corporate bankers and look to cross-sell products. So I think our strategy has been very clear. We want to bank the large Indian corporates. We want to bank the multinationals who want to work in India. And that's true whether it's corporate banking, investment banking, or even, foreign exchange and other such services that we provide them.
All right. In terms of foreign banks, there are many other in India and that provide a lot of competition. We'll discuss that competitive edge that you may have and provide, and which works for your business on the other side of this show. So stay tuned to Big Deal.